Hi, this is Zak Mir with the Bulletin Board Heroes here at Zak's Traders Cafe for Thursday, the 27th February. Starting off with the FTSE 100, which has done reasonably well. We found new support above the old January resistance at 8,600, which is a plus. We're now hitting the old target area, 8740, 8750, which is looking good. And also we've had a decent intraday rebound with a hammer candle so far for Thursday. End of day close above 8750, which is where we are now. We could be looking for 9,000 plus by the end of next month, although I suppose it's difficult to see exactly what would do that. Ideally, we stay above that uptrend line from last month at 8,600, and also we stay above RSI 50. We've had an RSI 50 rebound, or above RSI 50, which is normally a leading indicator on the upside. So the charting working there. Moving along to the DAX, and here you can see that consolidating well at the highs, recent support, basically the gap, the floor of the gap there at 22,100, and the floor of that rising trend channel, and the resistance line projection there up to 23,300. That level, the target for the end of next month, giving this market a bit of time as long as we are above the 22,000 area. Moving on to the Dow, which has been the laggard in the recent past, and still struggling here at a falling 50-day moving average, which is not a great look, but at least we have bounced above the floor of the rising trend channel from March last year, and also above the top of the gap there at 42,900. That is actually quite a bullish setup, but we want to see an end-of-day close above the 50-day line, 43,600, to give us a move up to the highs again at 45,000 plus. Negative at the moment is the way that we are failing below RSI 50, which tends to be a leading indicator on the downside. So probably the percentage trade here would be to look for a test of the floor of that gap from last month and the floor of the rising trend channel from March. Moving on to Bitcoin, where the rug was pulled after the hacking news, and here we did, well, basically it's done what we didn't want it to do, but just nearly tested that 200-day moving average, 81,900, and obviously went below the potential support we were looking for, below 90,000 at 85,000, which was support on the way up. The current situation is that end of day close back above 85,000. We could be looking at the 9,000, 90,000 area again. Otherwise, we might need one proper test of the 200-day moving average, which haven't actually been below since back in October. Moving along to the situation at gold, which has been a relative paradise compared to the other markets. Here we're in a range between 28.75 and the recent record highs, 29.80, and looking for the top of that rising trend channel at 30.20 by the end of next month, or hopefully a bit sooner. On the downside, probably the worst here would be the 50-day line, 27.80, but really it looks like 28.75 is the proper support here. Moving on to the stocks, and a little bit of a new thing here with Agronomics, one of the stocks in the model portfolio. The idea there is that with that, it's a list of 5 stocks maximum, which have the best looking technical setups, and we had that for Agronomics a couple of weeks back below 6 pence. Shares, the initial target here, 6.6 pence. The next target by the end of next month, up to 10 pence. But a great turnaround that has been, upside valid. Well, we're above 6.5 pence. You can see the shares moving as I speak. Next up is another situation which is of merit at the moment, which is, well, it's of merit in terms of the funding news that we had yesterday. Interesting, though, that even though we had the funding news, which should save the situation, once again, the spike in the shares sold into, which is what we've had in September and back in last month as well. So somebody's still trying to get out, well, which is very disloyal, obviously. But at least while we're above the 50-day line, they're now rising at 17 pence. Looking for the area of the 200-day moving average, 39 pence, maybe up to as high as 46 pence if those pesky sellers or bedwetters actually get out. You can see those long spikes to the upside, which are sold into. Moving on to a personal favourite, or in fact 2 personal favourites. One is Eurasia, which is making progress within this rising trend channel from back in November. We're still looking for 8 pence while we're above the floor of the channel there at 4 pence. So hopefully Eurasia will deliver, along with the Russia-Ukraine situation helping it in the background. Moving along to Ferrexpo, and here rug pulls, well, 2 rug pulls. It was amazing we had 2 rug pulls. We had a rug pull, a bull trap, and then another rug pull. So not the friendliest place to be at the moment, this situation. Resistance coming in the low 80s, which is slightly concerning given that that's below the old support near 90 pence. But at least while we're above that 200-day line, 67 pence, which is rising, then looking half full rather than half empty. And a bit like Bitcoin, one would almost expect there to be a touch of that 200-day line at 66 pence. And maybe that is an area that people might want to bottom fish this situation. Bit of director buying from Gem Resources and from Peter Redmond. And here you can see we've had a gap off the low, which is encouraging. Top of the broadening triangle base there at 0.67. That's the target for the end of next month, while we hold current support there at 0.46. And with the help of a bit of bullish divergence there, lower low there for the price, but higher RSI so far this month. Potential decent setup coming from Itim Group, and here we've gapped up within a rising trend channel, which has been in place since the end of 2023. We've got the top of the channel there heading for 63 pence. We can get rid of the other one, it was a bit too high. And looking for that the low 60s, especially while we're above the rising 50 and 200-day moving averages at 40 pence. 60 plus maybe by the end of next month. Although potash can be a bit of an elephant's graveyard for investors, we've got nice technical setup here at core potash with the bull flag there above a rising 50 and 200-day moving averages. Top of the range and top of the channel there, 4.5 pence. We're looking for that by the end of next month, while we remain above the 50-day line at 2.3 pence. Moving along to Mkango, and here you can see that requested stock. I suppose the top of the channel there is actually the way I've drawn it now, which is encouraging. Rising 50-day line support there implied at 9 3/4 pence, and above that looking not only for the top of the range at 12, but actually that resistance line, the upper parallel there from the beginning of last year, as high as 14 or even 15 pence by the end of next month. So above the 50-day line, looking for up to 15 pence. Then Mkango by the end of next month. Next up is another requested stock, probably I think from the same person, Prospex Energy. Here it's slightly disappointing that we've had to go back to the 200-day line, but recent support there around 6.5 pence, and above that, still looking for the top of the rising trend channel there towards 10 pence by the end of next month. The key here is staying above recent or post-November support there at 6.5 pence on a mid-close basis. On to Rolls-Royce with its £1 billion share buyback, and just to show you how exciting rising trend channels can be, we've got one here which the shares have basically hit there around 725 pence. Probably looking for a new leg to the upside for the shares if we can clear the current resistance area, probably towards the 770, 780 area by the end of next month, but we'll revisit that as the week progresses. Back to Sealand, which has been a roller coaster ride, to put it politely, like the grand old Duke of York, marching right up and then marching right down again. But the situation here for people who like the company is that we bounced off the 200-day line there at 1.1 pence, and above that, still have the chance of at least an intermediate rebound towards 3 or 4 pence and the 50-day moving average. But the key here is that we really have to stay above that 200-day line. Finishing off with another stock from the model portfolio, the new one, and here it's Upland. The entry point there around 1.47 pence, and so 1.62 were rather chirpy. The initial target here was 1.54. Next target is up to 2.2 pence, and given that the stock is traditionally slightly leaky, we are encouraged by the move here through the 200-day line. We haven't had a move through the 200-day line since basically the summer of last year, or spring of last year, around the 3 pence level. So looking for the shares to hit 2.2 while we're above at least the 1.4 to 1.5 pence zone. That's it for me today. More updates tomorrow.